If you go to YouTube and search for best trading strategy, you will most likely find this video ranked number 1 from Trading Lab, best MACD trading strategy, 86% win rate. Does it really have an 86% win rate, and is it the best trading strategy? Today we will find out. Let's take a look. Today we take a look at the strategy, how it works, so we can code the strategy and backtest it. Let's go in.
This MACD strategy I'm about to show you is one of the highest win rate strategies you can possibly do in trading. It is very easy to use, works in almost every single market, and most importantly, it makes money. Well, enough talk, let's get straight into it. The MACD, or the moving average convergence divergence, is one of the most popular technical indicators used by traders. Essentially, this indicator uses moving averages to find trends in the market, and it's pretty damn good at it too. Now, if you're an experienced trader, you've probably used or heard about this MACD indicator before, but the MACD indicator by itself is just alright, to be honest. So make sure you watch this full video to see how I pair it with some other indicators to make it perform so much better. First things first, let's add the MACD indicator to our chart. To do that, you're going to go to TradingView or whatever chart website you prefer, and then you're going to go up here to the Indicators tab, type in MACD, and click this top one. Now that we have the MACD indicator added, let's make sure we know how the MACD actually works. The MACD is made up of 4 different components: the MACD line, the signal line, the histogram, and the zero line. The MACD line, which is the blue line, in most cases is usually a 12-day moving average. The signal line, which is the orange line, is usually a 26-day moving average. Next, we have the histogram, which represents the difference between the MACD line and the signal line. So, for example, the smaller the space between the two lines, the smaller the histogram gets. The bigger the space, the bigger it gets. You can also see once the MACD line crosses above the signal line, the histogram turns green, and if the MACD line crosses below the signal line, it turns red. And finally, we have the zero line, which basically represents the center of the MACD indicator. Now that we know the 4 components, let's make sure we know how to use them. The MACD indicator is insanely good at finding trends in markets. How you can tell if a chart is about to have an upward trend is by looking for a cross upwards between the MACD line and the signal line. For example, here the MACD crosses above the signal line, indicating the chart is in an upward momentum. And here the MACD crosses below the signal line, indicating it's in a downward momentum. You can also use the histogram to indicate how much momentum there actually is. So if the histogram is getting bigger, that means there is an increase in momentum. If it's getting smaller, there's a decrease in momentum. So how you actually want to use this indicator is by when the line crosses upwards, but only if they cross below the zero line. If they cross and it's above the zero line, you wouldn't want to enter the trade. It's the same concept with shorting. You only want to enter a short trade if the lines are crossing downward and it's above the zero line. So as you can see, just by watching this indicator is extremely easy to use. But the problem most traders encounter is that they only use this indicator by itself. Let me tell you why this doesn't work. The MACD indicator works extremely well if the market is in a trend. So for example here, the MACD indicator is doing a great job indicating when the price is about to move upward because the chart is in an upward trend. But here the price is in a downward trend, but the MACD is still signaling to buy long even though the price is going down. A simple fix to this issue, for example, if we're trading long, we only want to trade if the market is in an uptrend. You never want to trade against the trend because the odds will always be against you. So an easy way to figure out if the market is in an uptrend, you simply just need to add a 200-day moving average. To do this, you're going to go to the Indicators tab on TradingView and type in EMA, which stands for Exponential Moving Average or Moving Average Exponential. Click the top one. Then you're going to go here, click the settings of the EMA, and you're going to go to Inputs and change the length to 200, which is going to make it a 200 exponential moving average. Then you're going to go to Style, and I like to make mine red, but you can make it whatever color you want. Once we have the EMA indicator added, you'll see just a single line. If the price is above that line, the market is in an uptrend. If the price is below that line, the market is in a downtrend. So after learning that we only want to trade in an uptrend market if we're going long, so all we have to do is put it all together. We buy if the MACD line crosses below the zero line mark and the current price also is above the 200-day moving average. average. This will guarantee that you are only trading when the market is in an uptrend, which is a very powerful combo. If you wanted to short, you would do the exact opposite. So make sure the price is below the 200-day moving average and the MACD lines are crossing downward above the 0 line. So as an example, we would want to enter a long trade right here because the MACD lines are crossing upwards below the 0 line and the current price is above the 200-day moving average. Now, what I like to do is set a stop loss below the 200-day moving average. So the 200-day almost acts as a wall that the price has to break through to hit the stop loss. Then I like to have a 1.5 profit ratio for my profit target mark. So as you can see for this example, the strategy worked exactly as we wanted it to.
Okay.
And we made money.
Big promises. Let's see if those are valid. All right, I coded the whole strategy and here you can see how it works. I think it works pretty fine. We got the MACD here and the EMA over here. And as you can see here, we had to take a long position because the price was above the 200 EMA and the MACD was below the 0 line and crossing above the signal line. And as you can see, the risk reward ratio was kind 1 to 5 and the trade went into profit over here. Let me search for another example. Okay, here's another example. We had to take a long position here. Stop loss is right here. The target would be somewhere here. And we went into the stop loss over here. Here's another example for a short position. We had to open the short position over here, set stop loss to the 200 EMA, and we went into profit over here. Perfect trades. And now let's take a look at the statistics, at the backtesting results. And here are the backtesting results for the Ethereum USD 15-minute time frame chart. And as you can see, the results are not so good. We have a win rate of 45%, profit factor of 1.4. This is profitable, but not really reliable, as you can see here. Let's take a look at other time frames. 30-minute, 1 hour, 4 hours, 1 day. Let's also take a look at the 5-minute. This looks not so bad. Maybe we can make a deep back test. All right, that actually looks not so bad, but still the profit factor of 1.1 is not so good. When you have slippage fees, etc., I think this will not be so profitable. Let's also take a look at SPX, for example. 50-minute time frame. Okay, maybe in 1 hour time frame. The results for the SP500 in 1 hour time frame are actually not so bad. We got a profit factor of 1.4, a win rate of 48%. So this is actually working pretty okay. Let's see something else. Okay, this is a Euro USD chart. Here you can see the deep back test for Euro USD in the 5-minute time frame, and as you can see also the results are not very good even when you add your fees. So I wouldn't recommend you to use the strategy, but I put the link in the description so you can add it to your TradingView chart. If you really want to become successful and reliable, profitable in trading, you should go to pineindicators.com. There you can find a marketplace of top traders that are selling their indicators and strategies. If you take a look over here, you can see the results. These are backtesting, real backtesting results from TradingView. We verified and tested every strategy so you can be sure it works well. Here are the results and you can buy it, use it for yourself. And you also have a 100% money back guarantee. Shouldn't it work like described, you will get your money back instantly. So this is it for now. Take a look at pineindicators.com and we see each other again in the next video.